Hello and welcome to MasterChartsTrading.com market recap for the week ending Friday, January 16, 2015. Over the past few weeks, stocks were very volatile, but the long-term uptrend still remains, and we will look for buying opportunities within this bigger uptrend. Bonds hit all-time highs yet again, and this together with the money being pushed into gold and gold miners indicates that there is quite a bit of fear present in the markets. And also we will look at several of the really mega cap stocks such as Apple, General Electric, and JP Chase, which have come under some pretty significant selling pressure over the past few weeks. All right, so let's take a look at the S&P 500 large cap index. This is a hourly chart rather. So long-term trend is up. It still remains, and our latest entry point was on 18th of December. And as you can see, it didn't really work out that well because of the strong volatility that happened after New Year's. And so we entered right here on the December 18th, and we exited the trade on the January 15th with about a percent loss or so. And this will happen. I'm yet to find any trading system that is 100%. 100% of the time you're correct. It happens to even very experienced traders, etc. But the important thing is that you realize that this trade did not go your way, and basically move on with your life. So right now we're waiting for an oversold condition to manifest itself. I honestly don't think we're still there yet. I think we may still see some downside, maybe another 3%, possibly more to the downside. It's difficult to predict, but I just feel like unless we rally from here strongly, I think we may roll over a little bit to the downside. Let's look at market breadth and see how it's been behaving. Oh, sorry, I got the wrong item here. So, market breadth for S&P 500 large cap index. Interesting point. This Friday, right here, this pattern where we had a huge, big white candlestick today with a 1.3% gain, and it fully engulfed the previous day's candlestick. So this is called a bullish engulfing pattern. It's not a complete pattern because it needs a confirmation on the following with a follow-up on the next day or so. But this looks promising because currently, we are oversold, and if there's follow through on Tuesday, then there's a possibility we'll re-enter the market. But let's look at market breadth, and right here, S&P 500 percentage of stocks above 50-day moving average is below 50%, so that's a negative right there. The bullish percent index kind of rolled over below its 20-day moving average, but it's still above 50%, so this is definitely a bullish reading. And the New York Stock new highs, new lows indicator is still strongly bullish. So this is and also percent of stocks above 200-day moving average is definitely bullish. So this bullish percent index, the New York Stock's new highs, new lows indicators, they're all bullish. A couple of negatives I see here is, of course, the 50% exponential moving average. Only 49% of stocks are above it. and also the advanced decline line, for S&P 500. The important thing is that it broke below its January 6th low right there. So on day before yesterday, on 15th of January, it closed below this low. You can see it better right there. So this and there's no divergence still. We're making lower lows, and this is also a lower low. But that means that quite a number of stocks are kind of pushing lower. So this is a bit of a cause for concern. It can easily resolve to the upside because overall the market is still bullish. But we'll see. We'll see which way it resolves. Let's look at bonds. TLT, 20-year Treasury, 20-plus year Treasury bond fund. Strong uptrend for the past few months, almost probably a year, close to a year now. Several buying opportunities within the uptrend. Latest buying opportunity for us was on January 2nd, just a few weeks ago. And from there, we're up about almost 6%. So pretty strong bid in the bond market right there. On Friday, there was a sell-off in the bond market as the stock market gained. It's kind of like a seesaw. So, bonds lost about 1.27%. I'm not sure if it's still, if it's a cause for concern for the bond investors, because you can see it's a clear and strong uptrend. There may be some profit taken, so we may roll over a little bit and kind of go sideways, and maybe even kind of retrace about to 127 around here. But the point of the matter is there is a lot of scared money that's rotating out of stocks, and it's finding its way into bonds. Let's look at gold. GLD, SPDR Gold Trust. I highlighted gold and gold miners actually in depth a few weeks ago as well. Gold has been in a downtrend for many years since 2011. So it was until recently very profitable to short the rallies. Like for example here in July of 14, it would result in a very nice gain if you're shorting. But around November and December, it turned really volatile, and actually both of these long and short were not really good signals. But this latest signal, interestingly enough, was on the January 6th of this year, and we actually did enter the market here. So we have open gold position right now, GLD position, and it's pretty good. It's up about 4.5% since our entry point. And gold is getting a very strong bid, probably because of just the general uneasiness in the world, and also just 2 days ago, or rather just yesterday, the Swiss central bank, decided to announce that they no longer will keep the euro pegged to keep the franc pegged to euro, kept the advance of the franc. And this just completely stunned the currency markets, and gold benefited, strangely enough, possibly because of euro just collapsed against franc. So, gold is definitely looking better. Definitely looking better. I'm not yet ready to call gold in a bull market. This is still, in my book, a bear market rally. And let's look at gold miners. Gold miners have been very good performer as well. I highlighted this chart in the past. First, there was a triangle right here, and it broke out above the triangle resistance and also above the 50-day moving average right there. So gold miners, GDX, very strong performance. So it broke out, and then finally broke out against this resistance. So that was important. We were able to enter the market around here, actually on this pullback. So, today on Friday, it closed above even higher resistance level, going back to early October. So that's a really good sign. But really, what gets me excited about gold miners is the fact that this advance have been on strong breath compared to other rally attempts right here, and then another one right there. You can see that there was basically very low participation. So this is gold miners bullish percent index, and on this previous attempt, the gold miners bullish percent index didn't really go above 6% or so. So it really failed. But here it broke out. And in fact, BP is called a symbol BPGDM, bullish percent gold miners index. This measures how many stocks within the index are on a point and figure chart buy signal. And this is 50%, so it's actually a very good reading. It is now approaching a bullish market reading. So if it stays here and continues up, that would be a very good sign for gold bulls. And of course, you can see gold miners new highs, new lows percent also positive, and it was negative for a long time here. However, it's still, once again, because it is a long-term downtrend, I'm not yet ready to call this gold miners back into bull market. So what will it take for me to change my mind? And I wrote it here actually. I would say that it needs to clear this resistance and around $26, and preferably on weekly basis. So on a Friday close, it should be above this level here. So it's still got quite a work cut out for it. Let me see how many percent from here. So it would need to gain another 18%. That's significant. But gold miners are very volatile, so they can easily move, 5 and sometimes 6, 7% a day. So this, is a significant advance, and I'm expecting resistance right here at you see a 23 area right here, and also right there. Let me just get rid of this. And also right there at 200-day moving average as well. So we're definitely quickly approaching this level of resistance, and this could be a very important test, the 200-day moving average. Should it close above it and kind of hold this breakout, that will be quite bullish. And finally, let's look at some of the huge really big companies that comprise the S&P 500 index. So this is a kind of long-term chart of Apple, and this is going back several years. And in 2013, sometime in August 2013, Apple turned bullish. I'm sure it was bullish before, but this particular latest iteration for Apple, it turned bullish sometime in August 2013, and then it just went pretty much straight up. So this was about what, $65. It almost doubled, but maybe a little bit less. But important thing on this chart, some important features in this chart are, first of all, the MACD has definitely rolled over to the downside, and now is weakening. And the important thing is right there, the Arun, and this is a daily chart, so this is a kind of long-term perspective of Apple. It just surged to 100. And to me, this is telling me that there is significant selling pressure in Apple. I'm not yet ready to call this a bear market because I need a little bit more confirmation, but it's significant enough to warrant some attention to this. All right, let's look at General Electric, another huge company one of the big mega cap companies. It was bullish since 2011, you know, pretty much doubled again as well. But you see how here the rune red, it surged to 100 twice here, and this MACD actually rolled over and now is bearish. And there is this moving average crossover as well. So I'm actually considering calling this General Electric bearish at this time, and this happened just recently on January 14. So under pressure, significant selling pressure. And then finally, let's look at JP Chase. JP Chase, same thing as a long-term chart, and on this particular chart, JP Chase became bullish in 2012, December 2012. Had a significant run from about $35 to about $60, so almost 80% or so. But same thing, you see how it rolled over and is now bearish momentum, so it kind of wants to go lower, I think. And once again, same thing with Arun, it surged to 100. So this one also bears close watching. I'm not yet ready to call it bearish, but definitely something is going on. And these are mega cap stocks, so if they roll over, they will strongly weigh on S&P 500. All right. I think that's all I wanted to say for this week. So quickly, I wanted to show how you could find us on the web. Let me just move this a little bit. Okay, so if you go to www.MasterChartsTrading.com. Oops. There we go. MasterChartsTrading.com. You could see there all of these charts are located on our website, MasterChartsTrading.com, on public charts page, and from there you could see this link right there, public charts page, and this is where you can find all of the charts that I just mentioned in this article, in this piece. Of course, please sign up for our mailing list. You can subscribe to our mailing list right there. If you have Twitter, Facebook, YouTube, or StockTwits accounts, you can follow us there, and there are links there as well. That's it for this week recap. Thank you for watching, and have another great trading week. Goodbye.